Time for another stock review. This time we're talking ISRG, Intuitive Surgical. You can request a review like this if you are a member of my channel from just $1. $1 it goes to the bottom of the list, and higher up, about $10, it goes to the top of the list. And remember, these reviews are unpaid for by the company. It's just one of my viewers has asked me to do it for them. They obviously are an investor in it, or they're interested in it. I only own the S&P. I'm 100% in the S&P. So this is my portfolio. I don't pump and dump stock. I just own the S&P. That way I can do these reviews completely impartial and balanced, so you can make a decision whether it's right for you. I use the most advanced software, and I'll share with you what you're going to get in this video. You might like to tap the like button if you like this sort of content. Here is the subscribe button if you want to follow me. In this video, you will see, where's my button gone? There it is. I'm going to provide the intrinsic valuation. I'm going to provide the balance sheet, the profit, the loss, the insolvency, who's buying it, who's buying on the inside, who's selling, what the short position is. I'm also going to, share with you fellow analysis ratings. I'm going to share with you how it compares to the S&P 500. Look at the latest chart, provide you an opportunity to get your own chart analysis from Sensei on Sundays. On the Sunday show, he'll do a chart just for you. Look at the latest news, look at the latest earnings, share with you their website as well, what the company are talking about, what's going on. So you can make an informed decision. Sound good to you? Okay, tap the like button and consider subscribing to our channel. All right, let's make a start and let's get right into it. So we'll start nice and simple first of all, and we'll look at the line chart. Well, that line chart looks fantastic, like the S&P, but slightly better. In fact, Intuitive Surgical. This is going back since 2000, so the last 24 years. This has been the growth. Very nice indeed. But what is this company? You're saying, I've never heard of it. What's it all about? Intuitive Surgical engages in the provision of robotic-assisted surgical solutions and invasive care through a comprehensive ecosystem of products and services. Its products include Vinci surgical and ion Endoluminal systems. The company was founded by Frederic H. Moll, Gordon Freund, and Robert J. Younge in November 1995. Headquartered in Sunnyvale, California. Listed name is ISRG. Founded in 1995 in California. A nice American company, so it's not going to be manipulated like it would be if it was a Chinese company. Employees, 13,676. The CEO is Gary S. Guthart. Now then, if you'd like Gary on the show, we have a Meet the CEO series. I have lots of CEOs that I'm friends with on X, Instagram. If you want to follow me on X and Instagram during the making of this video, I'll put the link there in the chat, and for everybody else, it'll be below the video. There you go, guys. And all you do is simply email investor relations of any company and ask them to be on the show. Tell them that we have a Meet the CEO series. Tell them you're an investor and you'd love to learn more about the company in an open, frank conversation that is not scripted. It's completely off the cuff and natural. That's why my CEOs like coming on my show. They say we just like to talk about the business in a less formal way than they get on CNBC and Bloomberg and all the rest of it. Now then, if you were buying at a margin, it's got a 25% margin requirement, which is regarded as very low risk. Always some risk, of course, but regarded as the lowest. That's the S&P maintenance requirement, 25%. Average volume, none. People just own it. That's a good sign. We like lots of volume on trading stock, so you can get in and out and not get stuck in the stock. Remember, you can only sell if someone's buying, and if they're not buying at the price you want, the price gets lowered, and so it goes on. There's no volume here. People just buy it, own it, live with it, and it's not a dividend-paying stock. It's just a growth stock. Very nice indeed. Price to earnings ratio, 80 times earnings. People overpay for this stock. Well, nothing wrong with overpaying for a stock if it's going up for the future. Nothing wrong with doing that. Nothing wrong with paying a lot of money for a stock, whatever the value is, if you know it's going up higher in the future. I'd rather pay a lot of money for a stock than buy a rubbishy stock, penny stock with no value whatsoever just because it's cheap. Cheap is often rubbish. Expensive isn't always good, but it can be. This stock is very expensive, but I think the proof is in the pudding of how it's grown over time. 173 billion. It's a decent sized company then. 52-week high, 493. 52-week low, 254. But it hasn't traded up and down within that range. It just heads up towards that range. So that's good. Let's have a look here. Now then, let's have some information here. I'm going to share with you the insider trading in a minute, but I'm going to do it in a better way than this. So just bear with me. Let's look at Morningstar. They've reviewed the stock. I don't buy what Morningstar say. They're paid to say these things. I do it for free. But they're saying 64.5% buy, a hold of 29%. No one's really selling, 6.5%. Bulls say Intuitive's foray into bronchoscopy shows the company isn't resting on its laurels and is willing to look at other areas in need of robotic assistance. The Bears are saying, however, while bariatrics robotic surgery adoption has been strong, the entire field might be shrinking with the emergence of the weight loss drug category. Fair enough. All right, scroll down. Look at the earnings. Fair value on this stock is 265, so you can see, but I will give you my fair valuation in a minute, see if we agree. 265. So it's overbought at the moment. It's expensive. Wide economic moat. What does a wide moat mean? A wide moat means the margin. That means their profitability, their profits. In other words, the wider the margin, the more they can crush the competition. The more money they make, the more difficult it is for others to compete. If you've got a narrow margin, no moat at all, then you can easily be taken over. That's what when people talk about being taken over or put out of business by competition. That moat, and they've got a wide moat. Uncertainty is high. That doesn't mean it's bad. That this is uncertainty. This is an uncertain market, of course. And when you've got a stock that's potentially overbought, uncertainty is high. Stewardship exemplary. In other words, the way the company is managed is exemplary. We like that, and we can see this because we look at the earnings and it's consistent. Wall Street are getting very good at analysing the stock. They're pretty accurate. However, the company seems to beat their estimates and steadily rising as well. And in fact, recently, they've beat by a considerable amount. October the 17th is the next earnings. If anyone does me a $5 super chat, I will cover the earnings for you. I can do 2 in the morning, 2 in the evening, and I will do those earnings to cover the stock for my members. Members only, with a minimum of $5 super chat. Who else is buying the stock? Eli Lilly, good company. CrowdStrike, good company. Humana, Microtechnology, Merck, SBA Communication. This is the company you keep. And that's important because these are the people that are also buying the stock on Robinhood. And that's important because if we had Mullen in here, scam stocks, it tells you we're going to get short interest, we're going to get idiots who just don't know what they're doing, pumping it on a social media platform. They don't tend to get involved in stocks like this. It's too expensive. Not everyone, remember, can fractional trade. Not everyone can buy $10 of this stock. A lot of people can now, but a lot of people still don't realize they can, even though they can. I've spoken to people who don't even realize they can do that. So because of that, the company that this stock keeps is good. So far, I like it. Very strong growth. Yes, expensive. Well, sometimes quality costs. Good company, good balance sheet, good movement here. I'm okay with the sentiment from Morningstar. Ever increasing earnings, steady as she goes. Good company. So far, I like it. Is it a buy? Don't know yet. I haven't looked at the balance sheet. Right, let's go over to this screen here and share with you. You can see the market has turned red at the moment. That shouldn't concern you at all with this stock. If we scroll down, we can see who's buying and who's selling. So on Robinhood, it's 50-50. To be honest, I don't really care. what retail investors have been doing with this stock. It's far too big to be influenced by a few Redditors, or it's not even of interest to me. I don't care whether Robinhood investors are buying it or not. I am interested though on hedge funds and insiders. Hedge funds have been buying and trimming. That's okay. Recently, they've been taking some profit, more profit than buying. And that's understandable as we are at an all-time high and it is very expensive at the moment. Okay, but let's have a look. As we can see here, details of hedge funds. Let's go and see. We've been trimming off recently and there is still some buying though with hedge funds even at this level, but we are seeing those that trimmed off, that bought it earlier, have taken some profit. There's nothing wrong with that. That's perfectly acceptable. People trimming, you can get more details if you want this, if you use Robinhood. Insiders is what I'm most interested in. And insiders, let's have a look. Now, what we're looking for is insiders buying. If we get uninformative buys and sells, doesn't matter. Businesses always buy and sell all the time. It's perfectly normal. With uninformative buys, that's perfectly fine. That's just tax positions. Let's see if we do have uninformative buys. So insiders, let's have a look. Oh, hello. What's this?
Rick McGrath donated $5 through a super chat. For ISRG's earnings, I called it whoa what, rock on gesture, cool face.
Thank you very much indeed for your super chat during this video. Thank you very much indeed, Rick McGrath. Thank you. Now, what you can see here is uninformative buys. Now, and uninformative sells. Like I say, there's no dramatic buying and selling. There was back here, back when was this? Back in February, when they were buying, which was fantastic. What we've got now, though, recently is just uninformative buying and selling. That's just for tax reasons. They don't even know they're doing it. They're not even aware of it. It's been set up by their CPAs, their accountants, their financial structure, and they're just buying and selling. That's perfectly normal to manage their own internal positions. That is not a sentiment that's bad. Insiders aren't dumping. They're not buying. It's just normal. What is interesting is this position here when they bought in mass. Back in February, that was good. So far, sentiment on this stock is very, very good. So we're happy. We're happy with the sentiment of trading, insiders, and so on and so forth on this stock. So far, I like it. It's expensive, but that's okay. Some stocks are expensive because they're just good and people are buying the future. Remember, real investors buy the future of a stock. They buy now and sit and wait, and the stock grows into the price, and now they have a great business. Right, let's have a look at the numbers, shall we? So let's start by looking at the intrinsic value. If you like this, tap the like button and consider subscribing. We very much appreciate it. All right, here we go. Let's have a look now at the numbers. So intrinsic valuation. And it's accurate. There are no warnings here. It's accurate, saying it's 64% overvalued. Now, it's a growth stock. No question about it. It's a growth stock. So I can pay 25% over because that's my parameter. I'm happy to overpay for something that's going to grow, but not forever and ever and ever. Not prepared to give you 50 times its value, 1,000,000 times its value. That's not value. I'm a value investor. I'm looking for quality. I'm looking for a good value. Same as Warren Buffett. Looking for, because I'm just like Warren Buffett, if I'm honest. Might as well just say it. Might as well just put it out there. I'm just like Warren Buffett. Absolutely. Exactly the same. Less hair, perhaps. Anyway. I'm joking, of course. No, I'm not. I'm being deadly serious. No, I'm not. I'm joking. Right. No, I'm not. This could go on forever. Move on. It's a review. Someone's paid $5 for this. No, $10. Best case scenario, 64%. It's expensive. No two ways. It's expensive. Worst case scenario, 72. Not much more than the 64, if I'm honest. But what about best case? 49%. Even in the best case scenario, it's 49% overvalued. So however we look at it, it's expensive. Does that mean you can't buy it? I wouldn't buy it. It's not a buy for me at this price. It's too expensive right now. However, I like buying great businesses. I'd rather overpay for quality than buy rubbish. It's a great business. Obviously, it's a great business, but it's expensive. Over time, it'll get cheaper, but you want to try and get a pullback if you can. Because it's over expensive, there are those that will trade and sell it off and provide you with opportunity to buy it. It's just a transference of wealth. That's how the stock market works. One person bought it before you even thought about it a few years ago. They then sell it to you. That's great. It's not a binky bonk. It's not a rubbish business, not a crypto coin. It's a real business. They sold you a great business. You bought it for a fair price for where it's going, and then you hold it like they did, and then you sell it to somebody for a profit. They're buying a good business too. What about the balance sheet? Right, because that's what you're buying. You're buying the business, right? Well, as we can see here, the latest numbers, June 29th, just out. These are the latest numbers we've just reported on, and we are up. June 29th, 7.6 billion revenue. We're up. As you can see, we're up 3% and expecting to continue growing into that stock price. Fine. Operating income up 6%. Net income up 5%. All with future growth planned. Financing cash flow down 28%. Investing cash flow up 97%. Operating cash flow down 3%. What about the business itself? Well, we like a business with plenty of assets, a smaller proportion of liabilities, and some cash, but not cash sitting around doing nothing. We can invest cash if we want ourselves to stick it in the bank and earn money. Earn it on Robinhood, 5%, easy. 16.6 billion in assets, 4.9 billion in cash. Perfect. That's exactly what we want. A good amount of cash, not too much, making them interest, making them some money, but most of their money is earning in the business. We like it. Liabilities, a fraction of their assets, 1.9 billion. No long-term, no short-term debt. Wow. Surprised me. I thought there'd be some debt, but nothing at all. Very, very, very good. This is going to be an amazing balance sheet. Now, I look at this. I'm looking at the screen. What you're seeing on the screen is what I'm seeing for the first time. Right? I haven't pre-organized this review. I do it live. That's how people like it. I'm reacting to what I'm seeing, and I'm explaining what I'm seeing in real time. I expect to see, and I'm going to put my neck on the line now, I expect to see 80% or more balance sheet score, solvency score, because that is perfect. It could be higher, so I'm trying to be a little bit safe by going 80%. It could be 87, and I promise you I've not seen it. There's no way for me to see it. I'm looking at this screen. Let me scroll down. I'm going to see it in a second. It's going to come in view in a minute. Gross margin, 67%. Excellent. Operating margin, 26, 28. Net margin, 6% FCF. Very good. ROCE, if you want the definitions of these, my software will give it to you, and you can use my software for free, and you can find out what this is, or get a premium service, basically 10% discount, would basically make my membership for free. I know the CEO of Alpha Spread, so I'll give you the link for Alpha Spread now. Here it comes in the chat. It'll also be below the video and links everywhere else for those that watch the video later. Stacey Bailey, cash flow, 14%, ROIC, 19%, ROA, 14%, 16% ROE. All right, scrolling down. Latest earnings. I was going to share this on a different screen, but I might as well share it as I'm here with you now. Intuitive reported a solid quarter with a 14% increase in revenue to 2.2 billion and a 17% growth in Vinci procedures. The company placed 341 systems, including 17 Da Vinci 5 units, reflecting its continued measured rollout plan. General surgery drove US procedure growth, whereas Europe and Asia saw mixed market conditions. Net income rose by 640 541 million from 507 million. Product margins improved due to cost reductions. Of course, everyone's getting that now with supply shortages pretty much behind us. While operating expenses increased by 11% year on year. Looking ahead, Intuitive expects continued strong demand and is narrowing its 24 procedure growth forecast to 15.5% to 17%. Very, very good earnings, of course. Right, here's that score. Now, honestly, on my mother's life, just because I've done over 200 of these, experience now gives me some indication. What did I say the percentage was or would be looking at that balance sheet? I guessed 80%. I was being safe. It could have been 87, but 80%. Let's see. Experience in life is everything. The more you do it, the more you learn. I'm happy with that. 81. Honestly, on my mother's life, I had no idea what was going to come up. 81. I guessed 80%. When you've done about 250 of these, you start to see the patterns in businesses, and you can see where business is going. It's all part of it, right? 81. Amazing. Could have been a bit higher, but 81. Very, very, very good. Very, very good. Business not going anywhere. Solid. Excellent. Profitability, 66%. Very, very good. Very, very, very good. Not excellent. It's not a tech stock. It's not 80%. Still very, very good. Now, Wall Street, despite the price of this stock, worst case scenario, 15% downside. It's a buy then, isn't it? It's a buy, because if you're buying a great business with a great balance sheet and great profits and great margins and great history and great moats and exemplary discipline in an industry that they are leading in, if you had $1,000 and you bought $800 worth of it now just to get in, if it drops 15%, you spend the extra $200, now you're fully in, done. Who cares? Who cares? You've lowered your average. Who cares? Worst case scenario on a growth stock, 50% down? Don't care. Don't care if Nvidia drops 20, 30%. It's a great business. It'll go back up again. Don't care. Just allows me to lower my average. Am I going to wait for it to drop 15%? No. It's not low enough. If that said downside 80%, worst case scenario, all right, I'll wait a little bit. But no, 80% in now, 20% on a dip. Let it ride, give it 6 months, I'll be up. I'm okay with that. Worst case scenario, down, no problem. On average, 1% upside. Well, that's underperforming the S&P, but that's on average over the next 12 months. You're buying this stock to own. No one trades it. You've seen the volume. You buy it, you own it, right? You buy a little dip, you improve on that, don't you? 80% now, 20% extra. That you're already up now. What if that drops 15% and you split the difference? You're up 7%. No problem at all. You just own it. You just own it. Best case scenario, and we probably are. Best case scenario, rates coming down, economy strong, everything is good. 20%, you're outperforming the S&P. If you get the little dip in between, boom. Yeah, it's a buy from me. It's a buy. It's a simple. It's a good business. It's a good business to own. Right. There's the competition. If you want to use my software, go through the competition, see what everybody else's margins are like. If you like the sector, why not look at Boston? Why not look at Stryker? Why not look at Becton and say, hey, they've got a better margin, they've got even more money, they've got a better balance sheet, blah, 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 or whatever. We've already covered the ownership. We're very happy with that. We've already done all of that. What about the short interest? Was there any short interest at all? We report 1.2. 1.2. Even with the price being high, no one. It's not because. First of all, it's because you're not going to short a great business. You don't short Apple, right? It's always like less than 1%, around 1%. But also, the idiots that live in Reddit, StockTwits, whatever. It's a good name for them. They're not watching this stock. We've shown you the company it keeps. You're not going to see this on Reddit. You're not going to see it. So there's no people running around just trying to short the stock. So you're safe. You've got a good quality stock, not going anywhere. It's also not going to short squeeze either. But then, This is 3 months ago, so we're not going to talk about that. There we go. Let me give you some more information if I've got it. I gave you, did I share with you the website? I can't remember if I did. This is their website. It's a very clean website. Not a great deal to learn from there, but if you want to go and check it, it's intuitive.com. Makes perfect sense. That's my party for tonight. Don't know how that got in there, but there you go. The earnings, I was going to use this screen, but I've already covered it, so I don't need to. The back test against the S&P, I can't remember if I showed you that or not. If you put $10,000 in this stock, you've now got 75. It's nearly an 8x compared to the S&P, which is just over a 3x. As you can see, it's outperforming the S&P, and it's riding above the S&P again. Very much like my last stock, Bavarian Nordic. You can buy, sell, buy back, and you're always safe above the S&P. So you're always growing, even if you sold it and tried to buy it again. You're always going up again. It's a solid business. Not hard to review stuff like this. So there you go. There's my evaluation. I am done for the day. I've been going since 6 o'clock this morning, nearly 5.5 hours. And it's time for me to finish. If you want a review like this, become a member, a $5 super chat minimum. I'm going to start. No, it's not. It's $1, isn't it? It's $1. Bloody hell, I'm going to up the price of that. This is too cheap. $1, you could be on the list. If you pay more, you go up the list. All right. And you get done sooner. Click above my head for all the links down below in the description. I'll give you all the links for Alpha Spread, Seeking Alpha. When this video comes out later on, you might want to do a super thanks on it, promote it. I pretty much guarantee I'll rank #1 for this stock because no online media is talking about it much. I am. This is my second video I think I've done on it. I'm sure it'll do. I'm sure it'll do well. Great business. So buy from me. Just try and get a little dip if you can. Don't go all in on day one. We're dipping a little bit now. Yeah. Click above my head for all the links down below in the description. Over here, I'll put my full Alpha Spread playlist. Way over 200 now. I'll be checking soon. It might be 300. Down below here, I'll do the intuitive playlist, which is ISRG. So if you join Sensei on Sunday and he does a chart for you, I'll put it down there in the playlist. Join Sensei on Sunday. I'll give you the link for that as well. It'll show you the buy zones, sell zones. All members get free reviews, free chart analysis. That's it from me. Thank you very much. I'm tired. It's time to go and relax. Till next time, as always, take care of yourselves and each other.